Tired of dropping your phone or struggling to prop it up? Meet the Pop Sockets phone grip with expanding kickstand in black, your new must-have accessory. Don't miss out. Grab yours today. Click the link in the video description to shop now on Amazon.
Welcome to Linko, where we dive into the world of finance and explore the stories that matter. Today, we're looking at Sterling Infrastructure, a company that's got its edge in a tight construction market. Let's see how it's doing it. So, you might be wondering why competition is intensifying in the construction space. Well, it all comes down to scale, execution, and diversification. Companies like Sterling are positioning themselves as the go-to players for long-term demand drivers like data centers, e-commerce distribution, and critical transportation projects. And that's where reliability and speed come into play. They often matter more than lowest cost. Sterling's e-infrastructure solutions segment is really driving growth right now. Backlog has climbed 44% year-over-year at the end of Q2, with mission-critical projects like data centers making up a majority of its pipeline. And management notes that their ability to complete large-scale, multi-phase projects on or ahead of schedule is translating into repeat business and pricing power. But what about transportation solutions? Well, federal infrastructure funding is supporting growth in that segment too. And while there are some challenges ahead with the planned wind-down of low-margin Texas highway work, it's ultimately going to lift profitability. Building Solutions, however, faces housing affordability headwinds. Expect revenue declines through year-end. Financially, Sterling continues to show strong execution. Revenues grew double digits in its latest quarter, while gross margins expanded 400 basis points to 23.3%. Operating cash flow remains robust, and management raised full-year EPS guidance, signaling confidence in future performance. To keep its competitive edge, Sterling is also pursuing strategic acquisitions. The pending purchase of CEC Facilities Group adds mechanical and electrical services, creating a more integrated offering that could further differentiate Sterling from rivals focused solely on price. Now, let's compare Sterling to some of its peers. Granite Construction is another key competitor in the heavy civil and transportation space. Like Sterling, Granite is benefiting from federal infrastructure funding, but faces ongoing project execution challenges and margin pressures. And then there's Tutor Perini, which competes in complex infrastructure and building projects. While it has struggled with project delays and cost overruns, Sterling's disciplined project management gives it an edge. Ultimately, while peers wrestle with execution risks, Sterling's diversified portfolio and strong backlog may allow it to maintain its edge in a tightening construction market. And with shares up 50.4% in the past 3 months, outperforming the industry average, it's clear that investors are taking notice. So, what does this mean for you? Well, as an investor, it's always important to do your research and stay informed about the companies you're interested in. And if you're looking for the latest recommendations from Zacks Investment Research, we've got you covered. Just head over to our website to download 7 best stocks for the next 30 days, absolutely free.